So folks, we'll just wait a moment for our legal counsel and then we'll get ready to start. Good morning, everyone. Welcome to Audit and Finance. Our apologies for the short delay. My name is Kathy Daigle-Gem, and I am Vice Chair, sitting in for our Chair, Paul Russell, till he arrives because he's sitting in traffic. So we will call to order at 10:06. A land acknowledgement that the Halifax Region Municipality is located in Mi'kma'ki, the ancestral and the traditional lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. We would now ask for approval of the minutes of July 17th. Apologies, I didn't hear. Oh, Sean, thank you. Seconded by Councillor Lovelace. Are there any errors or omissions? Hearing none, we'll call for the question. All those in favor, please signify by saying aye. Opposed, nay. Motion is carried. Approval of the order of business and approval of additions or deletions. Dorothy, do we have any additions or deletions?
No additions or deletions have been received by the clerk's office.
Thank you so much. Thank you, Councillor Cleary, seconded by Councillor Hensby. All those in favor, please signify by saying aye. Opposed, nay. Motion is carried. Business arising out of the minutes, there are none. Call for declaration of conflicts of interest. Hearing that there are none. Motions of reconsideration, there are none. Motions of rescission, there are none. Consideration of deferred business, there is none. Notice of tabled matters, there is none. Correspondence. Madam Clerk Dorothy, do we have any correspondence for this meeting?
No correspondence has been received by the clerk's office.
Thank you. And petitions?
No petitions have been received by the clerk's office.
Thank you so much. We go now to presentations. 10.3.1, Matt Sticklin, HRM's 2015 and 2024 risk management audits. Welcome, Matt. You have 10 minutes at the discretion of the chair. Oops.
Yeah, thank you, Madam Chair. Mr. Slicken, if you wouldn't mind, your request for appearance today indicates you're a political reporter, and I've seen at times opinion writer. Are you appearing today as a reporter, an opinion writer, or as in your individual capacity?
I today am very deliberately breaking the rules and norms that govern the relationship between the press and government because I believe there is a pretty significant risk to the city's risk management framework.
Just wanted to be clear on the record how you're appearing today and whether you're breaking the rules, as it were, or not. Thank you.
Norms, I would say, instead of rules, but yes.
Fair enough.
Please proceed, Matt. You have 10 minutes. And just prior to the 10 minutes, Dorothy will call up the time to let you know. Thanks.
So hello, my name is Matt Stickland. I'm a reporter for The Coast. My beat is City Hall, and today I would like to give you a presentation on the HRM's risk management framework. The Auditor General, as you know, gave you a presentation, or gave you a couple audits about a month ago now, and those were about the integrity of the risk management system as a whole. As part of my job, I'm able to talk to people like that, and I asked him some questions about, his office some questions about whether or not auditing, whether or not risk assessment was happening at the operational level was something his office did, but it turns out that is something that journalists are supposed to do, and there just aren't very many of us. Anyways, the title of my presentation is Predicting the End of Canada's Oldest Settlement. There are two types of people in this world, people who find that title needlessly dramatic and people who understand risk management. What I'm going to talk to you about today is councillors' role in risk management, how risk management should work, barriers to success, and suggestions for the ongoing policy refresh that is happening thanks to, I'm not sure if it's thanks to the Auditor General's audit, if it was ongoing anyway as part of whatever, the work that's ongoing. So what do you need as councillors for risk assessment? You need tactical information and you need strategic information. Right now, the city has a risk management framework that is very good at providing you the tactical information, the budgetary implications year to year for what you want to do and how it will impact the year-to-year budget. What is lacking in the risk management framework is the larger strategic pictures for what you are approving, how it will impact future years. And just to give you a bit of a background, I come to risk management from something called Bridge Resource Management. Bridge Resource Management is a combination of project management and risk management. It's what you do when you ship drive. You need to make sure that all the work on the ship is happening at the correct time and everything is deconflicted. At the same time, you need to stay ahead of the ship so that if there are hazards ahead, you can avoid them and continue your project management. I was on the Preserver when it crashed, and a lot of people into Irving, and a lot of people would be surprised to find that the mistake that we made that put us into the dock happened about 45 minutes before we actually hit. We were still in the Bedford Basin, but we had made a series of mistakes, and the one that broke the camel's back was about 40 minutes before we struck the dry dock, and we didn't notice until it was far, far too late. Similar things are happening here for the reasons I'm about to talk to you about. Anyways, how it's supposed to work, what the situation is. Situation for my presentation is that risk management is complex and confusing. The risk is that people might not understand the implications of risk management. Mitigation, you can teach people how to do risk management. And then you have to implement that mitigation. So you can create educational materials, like a slideshow that you can give to council. And you have to make that accessible. You can do things by providing clear information, clear examples, but you can also just follow the letter of the law and do it in Comic Sans. Because as we all know, Comic Sans is a sans serif font, and people who have dyslexia find it easier to read. Technically accessible, but not really what you want. So what are the HRM's barriers to success? Your risk management framework is insufficient to serve your needs as counselors. Your enterprise risk register is not accounted for in your reports, or if it is, it's not actually written in the reports, so it's 6 of one, half dozen of the other. And I'm going to talk to you about implementation as observed by the Auditor General's 2 audits from 2015 and 2024 on the subject. So this is the fiscal implications and risk consideration section from the Halifax and West Community Council a month ago. It's 37 single-family homes by Chocolate Lake. And the fiscal implications here are relating directly to the annual budget, i.e. the city won't have to pay for it because the developer is going to, so it won't affect your budget. And the risk considerations are whether or not it's in line with the MPS. I would argue that the province gave you a report in 2003, the city commissioned a report in 2014, Downtown Halifax Business Commission commissioned a report that said the same thing, and Happy Cities commissioned a report that said the same thing, and they all said that single-family homes in suburban developments have a massive potential to cost more than they bring in revenue. This is not a surprise. This is not a secret. This is not something that is hidden information. It's in a report that the city of Halifax commissioned. That is a fiscal implication for the long-term health of the city's budget. And so if this is not considered to be a fiscal risk, or there's no fiscal implications because it's paid for by the developer, so it won't impact your annual budget, but if it costs the city more to service, then it will bring in revenue that is functionally a subsidy, and subsidies have fiscal implications on the long-term health of your budget. That type of fiscal analysis is not really evident in a lot of day-to-day operational type reports when it really should be. And I'm not saying this risk assessment is bad or is wrong or shouldn't be done. I'm saying as counselors, you need an additional level of risk assessment that you are currently not getting from your staff reports. HRM's risk identification also ignores enterprise risks. There are a lot of examples I can choose for this one. This one I chose the Windsor Street Exchange report. This is all in the report. I'm not going to talk about it, this stuff, because you've all read it prior to coming to council. Anyways, in the Windsor Street Exchange report, city staff have outlined that they are prioritizing level of service, and that level of service because it will get federal money, which will offset the cost of building the project. However, this infrastructure is supposed to last like 50 to 75 years, and the HRM has multiple strategic plans saying that you want people to change the way we move within this next 6 to 25 years. Which means if we were to build a piece of infrastructure that prioritizes level of service and prioritizes something our strategic plans say we don't want to do, at some point our strategic plans will either be unsuccessful or we will need to spend money to correct the mistakes that we would make by prioritizing level of service now. That is also a fiscal implication. It is very esoteric. It is very far in the future. I understand why it is not something that a lot of people think about, but it is something as counselors you absolutely do need to think about. And so it is not doing this short-term, does it, how are we going to build it this year? Will outside funding help us in this capital budget? Will it help us get it built in the short term? It is essentially forcing the city into a penny-wise and pound-foolish decision-making framework. So the net likelihood of enterprise risk register, of your enterprise risk register risk number 1 is coming true right now, all the time, almost every staff report. Enterprise risk register number 2 says that the city does not want people to choose automotive transportation. However, if we're planning the Windsor Street Exchange to prioritize level of service, to get outside funding and all that other stuff, the best available evidence suggests that that will increase the level of car traffic that is seen on Windsor Street Exchange and work against the HRM's IMP, Halifax, and Moving Forward Together plan. What this means is staff decision-making in the transportation, and transportation is where I'm most familiar, and this happens in a lot of them, but a lot of the staff's recommendations are essentially incentivizing people to choose car travel over the bus or over active transit or all that other, hippy-dippy stuff that we want to be doing. So that too is happening right now, all the time, with every single staff report, which also means the enterprise risk register, I understand it's being updated, and this will not be the one that is going to come whenever the work of the Auditor General is done. But as of right now, the 2 first enterprise risks are coming to fruition on a regular basis in this city, and the city's risk register, the city's risk management framework doesn't catch that or doesn't clock that as happening. We're going to wait for StatsCan, and we're going to get that data from StatsCan that's going to tell us that enterprise risk register 2 has happened for every year for the past 5 years. So not only is the risk management framework not catching the fact that this is happening, it is also not adequately assessing the likelihood of risk happening. And this is just the first 2 that I am most familiar with. It would take a lot of time to go through the rest of it, and no one has that kind of time. But the city needs to make that kind of time because it is very important. So the big question is, how does this go undetected? And I think that, so essentially in 2015, the Auditor General found that everyone in Halifax Transit just kind of assumed that there wouldn't be an issue, so they just never thought about it. In 2021, when the city did its risk management update, a refresh, and we switched it from the accountants to the lawyers, the first thing the risk management team did was assume that the risk management framework was working fine. Risk management is all about assuming everything is going wrong all the time and mitigating that, even if it's not, planning for that. The very first thing the new risk management team did was like, hey, I'm sure it's working fine. We don't need to check. We're just going to carry on. The Auditor General found this, not the risk management team. There is a fundamental lack of risk assessment in the culture of this bureaucracy. So how do you fix that? So what is the most important question in risk management? So what does this information mean? What does this information mean to our strategic plans? What does it mean to the long-term health of our city? So you need to start asking the question, so what? The other thing, I think, being cognizant of the situation, is that the independent auditing that happened through journalism is going away. I'm soon to be the longest tenured City Hall reporter at 4 years. Pam Berman did it for 33. There is just not the institutional knowledge and outside accountability that exists anymore. So you need a red team, someone who can be kind of a Richard and be like, hey, this isn't working. Counselors, this is your interest. You need to start, asking the so whats. You're not asking so what. Hire a red team. Do you have any questions?
Thank you, Mr. Stickland. I see no names on the board for questions. Thank you for your presentation. We move on now to item 11, public participation. As of 4:30 on Tuesday, August 20th, there were no registered speakers for the meeting, and therefore no public participants. Has anyone signed up this morning, Madam Clerk? We have no signatures this morning. Thank you. So now move on to item 12, information items brought forward. There are none. Reports from the Auditor General. There are none. Staff, there are none. Grants Committee, members of Standing Council, motions, all of which there are none. We have no in-camera. Any added items, colleagues? Notices of motion, there are none. The date of our next meeting is September 6, 2024. I would now ask for a motion to adjourn. So moved. Councillor Lovelace, thank you. At 10:21, we just need a few minutes to reset, and then we will begin at the audit meeting. Thank you. Good morning now, and welcome again, this time for the Audit Committee of August 21st, 2024. We'll call to order at 10:23. And the Halifax Regional Municipality is located in Mi'kma'ki, the ancestral and the traditional lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. My name is Kathy Daigle-Gammon. I am Vice Chair of Audit and Finance and sitting in as Chair for our Chair, Paul Russell. We'll move on now to approval of the minutes of March 20th, 2024. Moved by Councillor Lovelace, seconded by Councillor Stoddard. Any errors or omissions? Seeing none, call for the question. All those in favor, please signify by saying aye. Opposed, nay. Motion is carried. Approval of the order of business and the approval of additions and deletions. Madam Clerk, do we have any additions or deletions?
No additions or deletions have been received by the clerk's office.
Thank you so much. A motion to approve. Councillor Cleary, seconded by Councillor Lovelace. All those in favor, please signify by saying aye. Opposed, nay. Motion is carried. A call for declaration, conflicts of interest. Seeing none, our next item on the agenda is item number 5, which is our year-end financial statements and fourth quarter financial report. And prior to the presentation, introductions will be made by Jerry Blackwood.
Thank you, Madam Vice Chair, Jerry Blackwood, Chief Financial Officer, and just want to welcome members of Audit and Finance Committee today and our public member. Good to see you again. Before we get started, I just wanted to introduce Dave Harley and Danielle Paris from our finance team, who will be presenting the year-end financial statements this morning, and that'll be followed by a presentation by KPMG, the audit findings report. I'd like to introduce Paul James, who is a new senior partner on this file, who's taken over from Carrie Blair, who you all know, and excuse me, Luan Hong, who is has been on our audit for, I think, some years now. So they will present the audit findings report after Dave and Danielle present. And as per years past and best practice, we encourage audit committee to go in camera after the audit findings report to have some time with the external auditors without staff. Thank you.
Great. Thanks, Jerry. I'm Dave Harley, the Director of Financial Management and Operations, and as Jerry said, I'm joined by Danielle Paris, our Manager of Accounting Operations. And we're here today to take you through our year-end financial statements as well as our fourth quarter report. So the financial statements that we'll be reviewing today are prepared by management, and we're presenting them to the Audit Committee in accordance with the terms of reference of the Audit Committee. As you may know, the committee is responsible for reviewing these statements with our external auditors, who are KPMG, and you'll have that opportunity once we've completed our presentation. So we'll move on to our financial position. So our financial statements, they do reflect just a point in time, and that point in time being March 31st, 2024, this past, the end of our past fiscal year. We would like to point out we do feel we are in a fairly strong financial position, but there are some financial pressures that exist and that will have to be addressed in the upcoming years. A significant one of those is asset renewal needs, which tends to be a fairly ongoing pressure that we see within the organization. We do present our financial statements in consolidation that include the consolidation of multiple facilities that contribute to our overall operations. That includes our MDF facilities as well as many commissions and cultural and other facilities and the Halifax Regional Library. It's also important to note that we do consolidate Halifax Water under the modified equity method of consolidation, so that's treated a bit differently. It's more of an investment in Halifax Water on our financial statements. And just quickly on our financial statements, they are prepared in accordance with GAAP and the public sector accounting standards, and we are expecting to receive an unqualified audit report this year. So we'll start with our statement of financial position. The statement of financial position highlights four key figures: our cash resources, net financial assets, non-financial assets, and our accumulated surplus. These figures kind of present a snapshot of the municipality's financial health at the end of the fiscal year. So just quickly, we show an overall shot of our statement of financial position, and we'll get into the details of the various sections in the next couple slides. So looking at our financial assets, a significant increase in cash this year is due to operating activities providing $161.1 million in cash. That is down from the prior year, but a notable factor here is we do reclassify our investments that are less than 90 days from maturity. We reclassify those investments as cash because they are going to be turned into cash in the short term. So in this year, we actually had $336.9 million of those investments that were classified as cash compared to just $93.5 million last year. So that's really a timing impact of how those are classified. Our accounts receivable have increased, but that's largely due to the timing of receipts. The increase in land held for resale was about $14.5 million. That reflects growth of our business park lots. We did have a decrease in investments. Again, that's primarily due to the reclassification of those ones that are coming due as cash. And our investment in the Halifax Water has increased. That's primarily due to a remeasurement gain on their defined benefit plans. Moving to the financial liabilities. We have a decrease in our accounts payable. That's largely due to our payroll accruals and the timing of payments, which has resulted in about a $27.9 million reduction. Again, that's all timing related. Our payroll deduction or our payroll accruals are an accrual based on the amount of time between the last pay and that March 31st date. Our deferred revenue has increased. That's mainly due to early receipts from our interim tax bills for the next fiscal year. Employee future benefits liability has decreased. That's reflecting a lower liability for our sick bank obligation and our long-term disability pension. And some of that is driven by the interest rates that we're seeing, which have been increased over the past year. So that's actually brought down our future liability. We saw an increase in asset retirement obligations that are primarily due to accretion expenses. Accretion expenses, this is a new thing that's been in our statements for the past year. Accretion expenses represent the increase in our future obligations as time passes. So this closer we get to actually having to pay out those expenses, we recognize a greater expense over time as we get closer to that actual payout. And finally, our non-financial assets. So we've added about $46.5 million worth of tangible capital assets during the year. That's a net number. So that includes acquisitions and donations of $20.6 million in land and land improvements, almost $28 million in buildings, $86 million in roads and infrastructure, $1 million worth of depreciation. So that's driven the increase in our tangible capital assets. The increase in our inventory and prepaid expenses over the year, it's mostly timing based on time of when we purchase and when we actually use those inventoried items. So we'll now move on to our statement of operations. This is the consolidation of the revenue and expenses of the municipality and those other entities that are being consolidated in. We do show expenses by the type of services provided, and if you want a different breakdown by objects, so salaries, interest, materials, that type of thing, we are showing that in our schedule of segment disclosure at the end of our financial statements. The type of services that we have are not based on our business units, but they're actually based more on the province's financial reporting and accounting manual and the services that they dictate we have to report on within that book. So in the statement of operations, we can see revenue growth was driven by several factors. Residential tax increased about $49 million. That was exclusively due to an assessment increase, as we actually in that past year had a tax rate decrease. Commercial tax revenue also increased by about $12.9 million, and again, that was basically due to assessment growth. Offsetting this growth, we did see that D-transfer tax actually, after several years of increasing D-transfer tax, we actually are in a bit of a decline the last couple of years. So this was down about another $8.3 million this year. User fees and charges saw an increase primarily due to higher transit fares, increased revenues within our ABCs, and higher building permit revenues and recreational fees. Government grants also increased primarily from collection of RRFB funds, so diversion credits. And lastly, investment income rose significantly again due to higher interest rates that we've seen this year compared to past years. On the expense side, general government services saw about a $5 million increase. This is largely due to grants for the Rapid Housing Initiative, and these are actually offset by revenues that we received for those same grants. Protective services expenses rose by about $21.5 million. It's driven by higher compensation and benefits and costs, a lot of costs related to our storm events. And those costs related to the storm events were actually primarily funded out from the risk reserve this year. Transportation services increased by about $38.9 million, again, mainly due to salary increases and also some very significant storm-related costs, especially around the flooding. Recreational and cultural services saw about a $13.4 million increase with higher salaries and benefits and operating expenses in ABCs. And planning and development expenses rose by about $4.8 million, again due to higher compensation, and we also had some increase in the marketing levy grants. Again, those are offset by increased marketing levies that we collected. This slide provides just a quick look at our accumulated surplus. So we started the year with an accumulated surplus of about $2,553 million. We increased that by about another $66 million this year in terms of our annual surplus. So our accumulated surplus at the end of the year was about $2.6 billion. Moving on to our statement of our general rate surplus. We did end the year with a general rate surplus of $13.6 million. So this surplus will be transferred to operating reserve as required by the province's FRAM, the Financial Reporting Accounting Manual. So we are looking to have a few other contributions as well, though. So we are recommending $3.5 million go to the Capital Fund Reserve, $8 million go to the Operating Stabilization Reserve. That's our risk reserve, and that's to refund many of the expenses that we paid out this year to cover off the costs of those storms. And then we recommend putting the remaining $2.1 million into the Options Reserve. And those recommendations are, you're asked to approve those as part of the motions that included in this report. Now we'll move on to the miscellaneous trust financial statements. So the miscellaneous trust funds saw an increase in cash this year. That's primarily due to higher tax sale revenues. Our accounts receivables decreased as interest on tax sales was recognized in the current year. Previous year we'd actually had to accrue for that, so that's why that was booked as a receivable at that point. The fund equity balances we have are actually detailed in the financial statements if you would like to see those. The increase in income is attributed to higher tax sales and investment income on the, got a slide ahead of myself there. So the summary of liabilities and fund equity shows the equity balances in the funds have decreased. The due to HRM line reflects tax sale surplus balances that have remained past the 20-year redemption period, and so they get moved to the capital fund reserve as per the charter. There we go. Income increased due to a rise in tax sales and investment income, while expenditures mainly increased due to transfers of interest earned to HRM for maintenance of cemeteries and interest from tax sales. Specific transactions include a $177,000 transfer to operating revenue and a $263,000 transfer of tax sale interest. So those are what's making up the expenditures that we're seeing this year. Next, we're going to move on to our TCFD disclosures. So this is the first year we're actually presenting disclosures of for this. So TCFD stands for the Task Force on Climate-Related Financial Disclosures, and this marks our first year of actually making any disclosures based on this framework. So there is a report in there that addresses how HRM identifies, assesses, and manages our climate-related risks, and this initiative actually aligns with Halifax Action 38, which integrates climate considerations into our financial decision-making. So we will continue to evaluate our process against the TCFD Maturity Assessment Framework, and that's something that was actually created by CPA Canada to help with the implementation of these disclosures. So next steps for our TCFD journey. We do plan to evaluate our progress against the Maturity Assessment Framework and explore additional content for future reports, and that can include things such as nature-related disclosures. Generally, the way CPA Canada has laid this out, they do expect proficiency in TCFD reporting generally takes about 3 to 5 years to develop, so we're on a growth journey in terms of that disclosure that we're doing, and we expect to be able to expand and improve on that each year as we go forward, so this is really our first step along that journey. So we're going to continue to monitor developments as well in public sector standards and disclosure capabilities so we can enhance our own reporting on this. But we are making our first go at this this year, so those are included in the package that we've given. Now we're just going to move quickly through the remaining items for the fourth quarter report. So we'll start with councillors' funds. We have district capital funds, which started the year with a total budget of $3.2 million. At the end of the year, $2.5 million had been spent or committed, so there was $0.7 million available for carry forward. Of district activity funds and the $72,000 budget there, we did see pretty much most of that spent. It was about $70,600 had been spent, so we did have just a slight $1.4 thousand remaining at the end of the year. For our recreation area rates, we did start the year with a surplus of $1.2 million. Revenues for the year for those area rates were $1.1 million, and we did have expenditures seen of $1.2 million. That surplus did decrease slightly down to $1.1 million as of March 31st. In terms of our reserves, so we did have balances in our reserves of $421.5 million at the end of the fiscal year. We do project out where we expect to be within the next several years. So you can see by the end of 27-28, we do expect to be at about $302 million. That said, a lot of those funds are actually committed at this point in time. So we actually are projecting our uncommitted balance to be about just $30 million at that point in time. Finally, we'll just look at hospitality expenses. We didn't actually have any reported hospitality expenses for the fourth quarter, so our year-to-date total was just shy of $30,000 in total hospitality expenditures, and the report for that is included in the package as attachment 9. And finally, on to our expenses for reportable individuals. So we do report this quarterly. You can see this quarter we did have a grand total of expenditures of about $22,000 for all travel, local travel out of town, and training development, that sort of thing. Year to date, that total is now about $112,000, and that's where we finished this last fiscal year. So now I'll turn it over to council for any questions they may have.
Great. Thank you very much, Dave, for that presentation. I really appreciate it, and I do apologize for being late. Traffic along Magazine Hill was terrible because of lights at Windmill Road and Akerley. Deputy Mayor, go ahead.
Thank you very much, Mr. Chair. Thank you, Dave, for the presentation. I have a question on slide 26, which is the reserves. So the projected uncommitted as of 27-28, that is assuming that there would be no increases in the reserves throughout the years, right? So the potential for that to be different depending on how we perform year over year from now until then?
Through you, Mr. Chair. So we do actually factor in expected contributions into those reserves. So we are projecting those to be included in there, but we have significant expenditures that we're expecting to come out of those. We are factoring in things like we have the election coming up next year, which is going to withdraw money from the reserves. We have lots of money set aside for the strategic initiatives, so we have all that committed towards those strategic initiatives that are there. We do project that those funds are continue to increase, but at the same time, we may have them as being committed. So they may be coming in, we may have them earmarked for a specific use. That's why they're showing as committed and not necessarily uncommitted funds. There is the possibility for that to change as unexpected things happen or as plans change, but right now that is where we are projecting to have uncommitted funds at that point in time.
Thank you. Thank you, Mr. Chair.
Thank you very much, Deputy Mayor. Go ahead, Councillor Lovelace.
Thank you, Mr. Mayor. Is the motion on the floor?
It is not yet. Would you like to make a
Okay,
motion?
I'll put the motion on the floor. I move that the Audit Committee recommend that Halifax Regional Council approve, 1, the consolidated financial statements of the Halifax Regional Municipality for the year ended March 31st, 2024. 2, the statement of general rate surplus of the Halifax Regional Municipality for the year ended March 31st, 2024. 3, transfers to reserves of the following amounts to reduce the general rate surplus to 0. That's Q416 operating stabilization reserve, 8 million. Q526 capital funds reserve, 3.5 million. And Q421 options reserve, 2.1 million. 4, the financial statements of the Halifax Regional Municipality miscellaneous trust funds for the year ended March 31st, 2024. And 5, the appointment of KPMG to be the external auditor for the fiscal year ended March 31st, 2025. And 6, the fourth quarter report for 2023-24 on district capital, district activity, recreation area rates, hospitality expenses, and expenses for reportable individuals.
Seconded by the Deputy Mayor. Thank you very much. Go
Thank
ahead,
you. I
Councillor
think I
Lovelace.
need a coffee after reading all that. Okay. Thanks for the report. Just, every time I hear surplus, I think, oh, this is great news. But then I read in the fine print, just investment income, which is great, which is awesome. I mean, it's not reliable, right? We don't know year to year, month to month, what that's going to look like. But then my heart sinks. Increase in tax sales. So when we see this increase in tax sales, I feel like we need a little bit more information. Right away I'm thinking, oh my gosh, there's a whole bunch of families that have just lost their property. Potentially this is intergenerational wealth that they've lost because of high tax rates, high assessments, I should say. Our tax rate keeps dropping. I like to make sure people understand that. Tax rates dropping, assessments going up. So I'm just wondering if you can give us a little context around increase. Are we talking a minor 1.5% increase? Are we talking a significant increase in tax sales? Obviously quantitatively, I just think we need a little bit more context, Dave. Thank you. Or Jerry, somebody.
Thank you, Councillor Lovelace. It's a good question. So when we talk about increase in tax sale, that is the treatment, the accounting treatment that we need, excuse me, for the trust fund. So any surplus funds we get on a tax sale, and just for context, say the outstanding taxes are $5,000 and the winning bid was $25,000, that $20,000 is not money that accrues to HRM. We have, under the charter, we have to move that money into a trust, and we have to hold that money in trust for up to 20 years, right? So when you talk about families that may have lost their homes, that surplus, tax sale surplus, can be redeemed through either a redemption or can be redeemed through a court order. With respect to the number of tax sales, you know, it is a very strong mandate in our charter that we have with respect to tax collection. And, you know, I can certainly assure council here that, you know, our tax sale process is taken with a very, very humanistic approach. The goal is not to sell the property. The goal is to find a solution, to find a win-win for both sides. And just because, you know, we do sell a house at a tax sale, most of the times those properties do get redeemed. There is a 6-month redemption period. So it still gives the homeowner, they don't have to leave their home. It gives them another 6 months of leeway to refinance and you know, work with the municipality to get that problem solved. So although for the treatment in terms of the accounting treatment, in terms of the money we have to allot to our trust, it isn't money that, or revenue that accrues to HRM that we spend. We just have to hold it, and then as that money the tax sales are redeemed, we pay it back out, and we pay it back out with interest as well. Thank you.
Thank you so much for that explanation. It's very helpful to have that context. I appreciate that, Jerry. Thanks, Dave.
Thank you. I see no further speakers on the list for questions of clarification, so thank you very much, Dave and crew. Can we now please get the presentation from KPMG? Great. Go ahead, the floor is yours. And red means go on your mic.
Great. Thank you, and thank you everybody for the opportunity to present our audit findings report. I will say at the beginning, our audit findings report is a continuation of our audit planning report that we would have presented at the previous meeting. So we won't reiterate all of those, but we will go into the findings. As Jerry had mentioned, Kerry Blair is the lead audit engagement partner. Kerry wasn't able to be here today, but I have shadowed Kerry, and I will be taking over as lead audit engagement partner next year, but happy to present on his behalf today. Our audit highlights, from a status perspective, we have completed the audit of the financial statements, with the exception of a few remaining outstanding matters, which are on a further slide, which I'll go through in detail in a moment. But I will say it's kind of normal course at this point in time of what those outstanding matters are. There were no significant changes in our audit plan, as I mentioned previously presented. And if anybody has any questions on those, obviously I can take it, but there were no changes in the plan. The one significant risk we did have, which was outlined in our plan, which was management override of controls, and I'll go through the details of that in a few moments. Only other thing to point out on the left-hand side, there's the accounting policies and practices. So there was an accounting policy adoption of a new accounting policy that was put forward by in the public sector accounting standards this year. There was no significant change to the financial statements, and that's disclosed in Note 2 to your financial statements, so no significant change as a result of the adoption of that policy. There was one corrected misstatement, which I'll get to on a future slide as well, which was subsequently corrected by management through the course of our audit. And we did not identify any control deficiencies that we determined to be significant deficiencies in internal control over financial reporting. So as I mentioned, from a status perspective, there's a few outstanding items. These are normal course for where we usually are at this point in time. So those are the completion of our quality review procedures, the receipt of legal letters, obtaining management signed representation letter, completing our discussions with the audit committee, obviously happening today, and obtaining evidence of the council's approval of the financial statements. We'll update the committee should anything happen between now and the completion of those outstanding matters that we believe need to come to your attention. The draft of our auditor's report is in the appendix of this report. As mentioned by Dave in his presentation, it is an unqualified audit report and unmodified in any way. And our audit report will have a date based off of the completion of these outstanding matters and the approval of the financial statements by council. So management override of controls is the one significant risk we do have as part of our audit. It is an unrebuttable risk in the auditing standards. It is because management is in a unique position to perpetrate fraud because of its ability to manipulate accounting records and prepare fraudulent financial statements by overriding controls that otherwise appear to be operating effectively. Although the level of risk of management override controls will vary from entity to entity, the risk nevertheless is present in all entities and therefore unrebuttable on our part. Our response to this risk is testing of journal entries, performing a retrospective review of estimates, and evaluating the business rationale of any significant unusual transactions that happen throughout the period. The procedures were performed with no exceptions, and we did not note any instances of management override of controls. There was one corrected misstatement, as I mentioned, by management throughout the course of the audit. It resulted in what you see here is the change of that correction. So there was a debit to deferred revenue of $1.8 million, so a decrease in deferred revenue, and a decrease in accounts receivable of $1.8 million as well, as a result of a transaction that there was no impact on the statement of operations, so no impact on revenue or expenses, but just I guess an overstatement of deferred revenue and accounts receivable, which we found during our testing and was corrected. Throughout our testing and other testing that we would do, we didn't find any other instances of misstatements throughout the course of the audit. This slide is more for information purposes, just definitions of what we consider to be significant deficiencies and control deficiencies around internal controls for financial reporting. And as mentioned in the beginning, we did not have any significant deficiencies. I did mention there was a change in accounting policy. So PS 3400 is a new accounting policy around revenue recognition in the public sector accounting standards. It was effective for years beginning on or after April 1st, 2023. So it was adopted, but there were no significant impacts on the presentation of your financial statements as a result of this. And as I did mention, it was disclosed in Note 2 to your audited statements. From an independence perspective, we take independence very seriously. We meet the standards set out by ASBA as well as the CPA code from CPA Canada and CPA Nova Scotia. We do confirm that as a date of this communication, we are independent of the entity in accordance with the ethical requirements that are relevant to our audit of the financial statements within Canada. That's the end of our presentation. Happy to take any questions, should there be any.
Thank you very much. And you mentioned that it's not complete, and there will be a completion of outstanding matters, and then you'll be returning, or at least we will see we will see the final report. Do you have a time frame on that? Or do we have a time frame on that?
It's really, I think the main outstanding matter would be approval of the statements by council, and we can't sign off our audit report until that happens, so that would be, once that date happens and the other minor points that are there, then we would be able to sign off.
Okay, thank you. Go ahead.
Thank you. So, so when we go through council approval, what will happen after that is we'll touch base with KPMG as well to provide them with the proof that council has approved our financial statements. And that's when we'll go about getting these signed financial statements, provide them with our management letters, and get their final independent audit letter to go within our financial statement package. And that'll be the final steps.
Okay, thank you. I wanted to make sure that there weren't more outstanding steps. So thank you, Dave. Go ahead, Deputy Mayor.
Thank you, Mr. Chair. I would request a motion to go in camera for our due diligence.
Seconded by Councillor Cleary. All in favor of going in camera, please signify by saying aye. Aye. All opposed? Great. Let's go in camera. Let's keep management here for the first little bit, and then we will ask you to leave after a few minutes. Thank you. And I'd like to welcome everybody back to the Audit and Finance Standing Committee. We had a good discussion in camera. I don't see any further speakers on the list for today for either KPMG or for our staff. So are we ready for the question? Question has been called. All in favor of the motion, please signify by saying aye. Aye. All opposed? Great, that motion passes. Thank you very much. We have had the in-camera session. Have we approved the minutes of March 20? Okay, so item 6.1 on the agenda is the approval of the minutes of March 20 of 2000, the in-camera minutes. Thank you, Councillor Daigle-Gammon, for approving those. Thank you, Councillor Lovelace, for seconding that. All in favor, please signify by saying aye. Aye. All opposed? Great, thank you very much. The date of the next meeting of the Audit Committee is to be determined. It will likely be in early 2025 when a new audit plan comes forward. And so with that, can I have a motion to adjourn, please? Thank you, Councillor Daigle-Gammon. We stand adjourned. Thank you very much, everybody. Thank you, Carolyn, for your participation in this committee. I really appreciate it.